Now let's talk about psychology of the trader. So psychology and execution discipline. So now we will completely target only these points in this video. So you have got the knowledge, you have got the understanding, but still you fail. Why? Because your mindset has not been prepared to take the trade properly. You get fearful, you get greedy at wrong times. And then what happens that once you get fearful, you exit very early in from the market. When you get greedy, then you take the wrong trades or just exit from the market by being fearful again that suppose market has gone little bit up 5%, 6%. You think that I need to preserve my profit, so let me exit from the market, and possibly after that 5% move, market would have shown 50% move as well. But you have not been able to capture that. How you are able to capture that? Those big moves, there is only one way in stock market through which you can target big moves in relatively shorter period of time, and that is understanding Elliott wave theory. And for that, we are conducting 3 to 4 months handhold session. And if you learn that, you will definitely be able to catch big moves in the market and exit at the right time, entry at the correct time. So but anyhow, that's another thing. Let's talk about the psychology and execution. So most traders have this issue. I have just mentioned that psychology is not proper, their execution discipline is not proper. So when we say execution discipline, that's what we mentioned earlier. Suppose it has gone up, but suppose it has gone down. Then when you should exit, if you have defined that okay 2% cut only you are going to take, then you have to take your exit at 2%. Don't think that let me go to 4%, let me see to 5%. You define your stop loss and then exit at that. You can define your stop loss beyond these support zones. So if you want to play in that way, suppose you have taken a trade here. Now you want to exit at this point, or you say at this support level only I am going to exit. So whatever the thing which you have decided, stick to that and stick to one strategy, and then only you are going to create profit from the market. Now let me just tell you one most important aspect in the market. And when I say most important, this is the most important aspect in stock market if you want to earn from the profit. And people generally talk about this aspect. They will talk about technical, fundamental, and so many concepts, everything. But they don't talk about this aspect. So now listen to it. In the market, you choose one strategy. So see, in the market, there are many kind of tradings. One is long-term investment, right? One is swing trading. Another is intraday trading. And there could be option trading, future trading. But whatever the kind of trading it is, there are hundreds of strategies for each kind of trading. And you can adopt any number of strategies. But what you need to do, first, you master one strategy. Suppose you are doing swing trading or long-term investing. So the thing is, you define first strategy for you. After that, you do a back testing. I have already shown you in the last video how to do the back testing. Okay. So you see how many percentage of times that back testing is producing positive results and how much of the percentage gain you are getting in that. So once you have done the back testing, suppose you have picked up 10 strategies, and out of that you identify one best strategy which was generating best possible return. Are you in the stock markets but still guessing your next move? I am from Uncover Markets, and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day. Or let us handhold you through long-term programs like Elliott waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. So now we are down to only one strategy. Master that single strategy for your type of investment. So I am saying whether you are working for swing trading or whether you are working for long-term investment, pick one strategy and then work on that. Master that until and unless you start getting continuous profit from that strategy. A single strategy for each kind of trading. So if you are just a long-term investor, pick up only one strategy and carry on with that. You will always find some stocks which are adhering to that strategy and that will work. Suppose you are a long-term investor but you work on options as well and swing trading as well. So now you need to have three strategies, one for each kind of trading or investing. So one for swing trading, one for option trading, one for investment. So you identify one strategy for each of those three things and then work on that. Once you have mastered it, when you are having continuous flow flow of profit from those strategies, then in the market your confidence will rise, and after that you are going to earn from the market well, and then maybe you can hope from those strategies to other strategies. Now let me just tell you what happens. Generally you do one strategy, okay, you identify with the hard work, you do the back testing, you have identified one strategy. What happens, suppose for a month that strategy has worked and that has produced suppose $100, but in the next month suppose that strategy fails, suppose you have got a $30 loss, you might be forgetting that you had got $100 from the same strategy. But now when this strategy has suffered some loss, then what will happen, you will panic, you will think that no, this strategy is no longer working. But in the market, just remember, market is cyclic, it works in cycle. Sometimes your cycle comes and then your strategy works. A lot of time that cycle does not come and your strategy either is not working or maybe producing negative results. But when you have done the back testing, so the purpose of back testing was that over a period of time you will be understanding that this strategy works over a period of time. So suppose for a particular point of time your strategy has not worked, stick to that strategy, because any strategy, however good it is not going to work for 100% of the times. Even the best of the strategies work for 70 to 80% of the times, and that is sufficient. So let market take 30% of that profit and let you yourself earn 100% of the profit. Now the problem is why people fail to earn that 100 itself, because now I am telling very important aspect, please listen to it carefully. Why people even miss that $100 initially which they should have earned, because they are not consistent. So suppose I mentioned that once price goes above 20 EMA, then I will take the trade. Now what people generally do, now people have defined this strategy that price goes above 20 EMA and I will take the trade, but they miss the trade. They are concerned, okay, what if it goes down, then it goes up, then they think, oh, now it has gone too far from 20 EMA, I should have taken the entry here, and they miss the entry. So the point is, when the trigger comes, you have to take the trade on the entry side and exit side both. If you leave it, then what will happen, the good part of the trade has already been left and you will be entering at the wrong part of the trade and you will not be earning much. And when it goes down, you will lose a lot of that, because when it goes down, you will think that let me just hold it, because otherwise my losses will be compounded. So let me just come out of the market with few losses. So you don't exit here, but you remain in the market, and here in the panic mode you sell, and after that market again goes up. So this is the classical mistake everyone does. You don't do that and you will see that you are in green. You will start earning from the markets. Thank you.